So, Michael, tell us what you like and what potentially you want to be a little bit more cautious on, because the market right now is still euphoric and they're still pricing in more of this Trump trade as we begin to see the personnel taking shape for Trump 2.0.
Yeah, I think Danny made a great point that everyone's seeing the bright side of every one of these trades. It's as if every Trump trade's in a vacuum to itself, and they're all going to be winners. And I think that's a big mistake. And if we all think back to 2016, I remember after the euphoria died down, there was a lot of volatility because you get headlines about one policy is going to pass and another one's not. So you have to view the market a little more selectively. Right now, the Magnificent Seven still are driving everything from an index perspective. I would guess with Tesla up another 6-7% today, that group is trading about 50 times earnings. And the rest of the S&P 500 is about 17.2 times trailing earnings. So there's a lot, the index is expensive. There's a lot of stocks out there that aren't as expensive. I think that's why you really have to be selective and not get wrapped up chasing this euphoria that we've seen in the past week.
Michael, you remind us of an era I think a lot of us forgot about in 2016 and onwards, when markets moved based on different tweets, on different policy pronouncements, and then they moved a little bit more as the administration tried to figure out exactly how to implement what Trump want. Mike, does that mean it turns us all into short-term traders? Do we need to have more agility and flexibility over the next 4 years?
Well, I think people are acting like short-term traders right now. I think that's why you want to be a little more thoughtful. I describe it to my clients and my coworkers as expect a roller coaster ride, because even though we know what the trend of what the policies are going to be and what the intentions of the policies are going to be, they're not, they don't work out that way exactly. For example, in the first Trump administration, the president really wanted to put the tariffs on Chinese imports. The biggest importer from China was Apple. And he, of course, gave Apple a waiver for iPhones because he wanted to be able to compete with Samsung. So to make a broad-based judgment, week one after the election, it's a very dangerous game to play. And I think that's why people need to be a little more thoughtful.
Fair enough. So in that thoughtfulness, I want to ask about energy, because energy was one of those sectors that ripped higher into this election, the assumption that Trump wants drill, baby, drill. But with domestic oil production already at a record, how much room does the energy trade have to run at this point?
I think it has room in the sense that valuations, it is the cheapest sector in the S&P 500, and you have some very, very expensive sectors. So I think there's potential there, but also we are all hoping for a good growth situation here in the United States. We're hoping that, obviously, if we shift investment domestically or inwardly, that should also help grow. So I think there's potential. There's been a lot of headwinds in the space. Of course, the current administration hasn't supported the space. We've had the China slowdown. So there's been a lot of negatives out there. So there's room for upside surprises.